Volatility is hitting the markets as worries over yet another recession in Europe take center stage. The European Central Bank is expected to announce a stimulus package next week, but is that enough to stop the bleeding? Let's bring in Russ Koesterich, Chief Investment Strategist at BlackRock, joining us from San Francisco. And Russ, we're seeing plenty of fears throughout Europe, especially with the decision by Switzerland's central bank to get rid of the cap on the franc's exchange rate with the euro. Give us your take on what's going on in Europe now.
Well, I think that what we're seeing is a preparation for what's likely to be, very likely to be, an announcement of a full-blown quantitative easing program by the European Central Bank at next week's meeting. The issue really is not whether or not the ECB is going to go next week, but whether or not their plan will be perceived by investors as sufficiently large to mitigate the risk of European deflation. And as you know, we're now in an environment where nominal prices in Europe are once again declining on a year-over-year basis.
But do you think Mario Draghi is doing too little, too late?
Well, I think Mr. Draghi is dealing with more constraints than other central banks such as the Fed or the Bank of Japan. And clearly the ECB is going to need to do more if they're going to hit their stated goal of getting their balance sheet back to 3 trillion euro. But that said, let's go back to something that Mr. Draghi mentioned, which I think is very true. Europe's problems cannot be solely fixed by the central bank. The ECB can mitigate the risk of deflation. I think they'll do whatever they can to accomplish that goal. But a lot of the issues in Europe are structural, and those can't be fixed by the ECB. Those can only be fixed by politicians at the national level.
Now, what about the Federal Reserve? Is there anything they can do?
To fix Europe?
To stabilize Europe?
No, I don't think so. Again, I think this is a problem that needs to be fixed by the governments in France, in Germany, in Spain, in Italy, and of course Greece. Obviously, the Fed, along with the ECB, can provide liquidity. But that said, the Fed's mandate is really to focus on the U.S. economy. And given the recent strength of the labor market, I think the odds are that the Fed will actually have to start to withdraw liquidity sometime by the second half of the year, given the fact that the U.S. economy does appear strong enough to start to stand on its own 2 legs.
Now, how does what's going on in Europe play into the Fed's plans to raise short-term interest rates? Do you think this could all delay a rate hike?
I don't believe so. Again, the Fed has a domestic mandate. They're focused on domestic considerations. Now, it's not to say that it could have no impact, and certainly if you had another crisis in Europe, if there was, for an example, an exit by Greece from the euro and that raised systemic risk, that's obviously something the Fed would have to take into consideration. Absent that, if all you're talking about is sluggish growth in Europe, some risk of deflation, I don't believe that's going to materially impact the Fed's decision on when to raise rates.
And finally, when looking at U.S. markets, we're seeing a lot of volatility. Do you see a correction coming at some point in the next few weeks?
Well, I think we're already experiencing that, but I think the key point here is, while we do think stocks in the U.S. will move higher in 2015, I believe the volatility that we've been experiencing since the start of the year, and really since back in September, unfortunately that's here to stay. And what investors want to keep in mind is this volatility is really more of a reversion to the mean. In other words, 2012 through the first half of 2014 was a period of unusually low volatility. As we get closer to the point where the Fed starts to remove monetary accommodation, we're going back to an environment of more normal volatility. And honestly, this is what it feels like.
All right, Russ Koesterich, Chief Investment Strategist at BlackRock, joining us from San Francisco. Thanks for your time today.
Thank you.
I'm Scott Gamm, and you're watching The Street.